Hi, everyone.
Hey.
I'm Josh Brown, here with Michael Batnick, and we're here to tell you about Global X ETFs. Michael, did you know that Global ETFs was founded in 2008?
No.
And for more than a decade, they've been pioneers in the thematic investing space. I've been aware of them since at least like 2010, I would say. I met these guys once. I did a bell ringing with them.
So what are they known for?
You tell me, but they have no, thematic investing is big. Like thematic investing is something that the public loves, and it's just a question of which theme catches fire at a particular time.
All right, so what's a thematic investment?
AI, clean energy, etc.
Well, I was about to give it to you. So for example, there's an ETF, the ticker is PAVE, that's U.S. infrastructure and development. They've got a lithium and battery ETF, the ticker is LIT. So things like that, copper miners, robotics, and AI. Oh, bots, that's a big one.
They've got more than 30 forward-leaning thematic strategies. It's a research-driven approach to thematic investing. You can learn more at globalxetfs.com/insights. See the link in the description of this show for more on Global X thematic strategies. 92.
John, you're getting good at that.
All right. Episode 92, Compound and Friends. Welcome back. It's your favorite financial-flavored podcast. Everybody's here. John's in the house. Duncan's here. Nicole is here. Robbie P. Is it right? It's been a minute. I haven't given you your shout-out yet. Rob Passarella is sitting in with us. And our special guest this week, I'm so excited for this show. We wrote you like an official. Okay. Listen to me do the name, too. Dion Rabouin is an award-winning journalist writing about markets and the economy for the Wall Street Journal. His work has appeared on CNBC, Reuters, Yahoo Finance, the New York Times, ESPN, and others. Dion Rabouin, welcome to the show.
Thank you. I love the applause, but I love the effects. This is great.
What'd you do? No, that's real. That's a real crowd.
That's a real crowd.
They're behind the glass. What did you do for ESPN? I didn't even know that.
So when I was down in Brazil, I covered the World Cup, and I just kind of wrote about here's sort of some of the business economic stuff going on surrounding the World Cup.
What year was that?
It was 2014.
Who won that year?
That's Germany, I think.
Was USA like competitive in that one?
The thing I wrote for ESPN was about how people thought the US might start to be competitive.
And then no.
Well, it was people were saying in maybe 10, 20 years, this is the start of the US being competitive. And do Brazilians actually buy it? And a few of them did. They were like, yeah, but there's 0% chance.
0% chance.
That's a Michael Batnick.
0% chance.
Wait, so you interviewed Brazilians about the US team? And
That was one of the things I did.
They must have thought that was funny. a little bit funny.
No, I think they expect it. They think that Americans are all about us, so they were like, yeah, of course, that's what you're
okay.
About.
Speaking of Brazil, we're going to start off talking about inflation.
Ooh, great segue.
All right. So let me set people up though a little bit on you because I watch all your. I'm a subscriber to the Wall Street Journal. And like everyone else, I'm consuming as much.
And you were gonna end your subscription until
you came along. That's right. Like everyone else in this world, I'm like defaulting more and more to video and audio, and I'm not reading as much as I used to. It's not because I don't want to. It's just this is the pace of life now. Your videos are like ubiquitous all over the Wall Street Journal's coverage, because you're talking about the most important things that are going on right now for investors. You talk inflation, you talk banks, central banking, the Fed. This is the ball game right now. So when did you start doing video for Wall Street Journal, and what's it like to be the guy?
Wow, all right, that's quite a question.
It's a good one. It's a good question, though, right?
It's a spectacular question, Josh. Thank you so much for asking.
Of course.
So when I came on, actually, this was going to be my job from the beginning. They said, we've got this new role we're creating for this thing we call journalists as creators, people on YouTube. And so your job will be to have a YouTube channel, and we want you to talk about markets. And one of the things that I found when I started doing that, we initially just started out doing these kind of longer 10-minute videos about a single subject. And what we found pretty quickly was 10 minutes is too long. People don't want to sit for 10 minutes.
On one topic.
On one topic.
Right.
What they want is quick, bite-size, 3 minutes, get in, get out. And so we started it took us a while to get from 10 to 3, which is how long they are now. But then the other thing that we've been able to do that we found recently is if I do a live stream, I can go a little longer. So I can do 7-minute live streams, 15-minute live streams, 20-minute live streams. And we'll do it like yesterday we did one on CPI data, or I should say Wednesday. CPI data came out and we unpacked the CPI.
What a pro.
Because he knows this goes up tomorrow.
I know, yeah.
How about that? Look at you.
So Wednesday, 10 a.m., after the CPI data comes out, we go through the CPI data. I say, here's what markets are doing. Here's why markets are doing that. Here's what was in the CPI report. Let me take you through the details. Here's what markets are reacting to. Here's the part, if you just look at the headlines, you might not get the full story. So let me give you the full story. And we can do those kind of live streams. And that also gets put up on the website.
So here's what I was going to say about that. You can get all of that video from Bloomberg or CNBC or Fox Business also, but you might have to wait 30 minutes for them to cover all these other things. Whereas if somebody just wants that right away and the video is sitting there, they can just click it. Okay, here's WSJ's take on CPI data. I got it in 3 minutes or 5 minutes and I'm out.
Right.
That is the way, from my perspective, that is the way things are going. What do you think about that?
No, I agree completely. And I think I also try to explain it in a way where if you're not a, savvy financial professional like yourselves, you can still understand what I'm talking about. You can still relate to. Like if you're if you're opening up the day, I know it's a lot of numbers and it can be kind of intimidating. I try to say, no, here's what that means. Here's what this actually means in context. Let me contextualize it for you.
So for YouTube, that's what's necessary there. Twitter is very different. Twitter is like, here's the most sophisticated take.
Yeah.
With like...
Is that a joke?
No. I'm deadly serious. Some of the smartest people in the world who pay attention to economics are on Twitter, and they will like look for the most obscure detail of a CPI report, and they'll do like a tweet thread on it.
Yeah.
And most people, they have no idea what's going on. They just want to know enough that they can get on with their day and their curiosity is sated.
Did you seasonally adjust that tweet thread?
I did not. It could be it could be longer, you mean? Okay. All right. So they let you set up your own YouTube channel, though, which is interesting. It's not WSJ's YouTube channel.
No, so it is WSJ's YouTube channel, and they've set it up. It's just like any YouTube creator out there, like a vlogger, like a YouTuber, they have their channels. But this is a WSJ, like Dion Rabouin markets channel.
That's what I mean. It's like purpose built for a creator.
Yes.
So you look more like a creator, and the channel looks less like it's a Wall Street Journal. Everyone knows Wall Street Journal, but like they're leading with you and not just with the brand.
Yeah, this was very intentional. This was part of a partnership that they have with Google, with YouTube, because they want more evidence-based and more, factual content on YouTube.
Google wants more.
On YouTube, yeah.
Yeah.
And they partnered with WSJ, and that was part of what we did, was we're trying to create more good stuff on YouTube rather than just a bunch of noise or a bunch of guys just kind of
because YouTube could have 1,000 people submit a video on CPI the day it comes out. But if one of those is a journalist who works for Wall Street Journal, is responsible for the things that he says, that's a win for them to put that in front of the audience and not just the other 999, God knows what.
Exactly.
So, okay, totally get it. So you having fun?
Yeah, it's been great. It's been really good.
How often are you guys putting stuff up?
So I do a weekly look ahead on Mondays, Mondays at 10 a.m. And then we'll do a second live stream at some point, depending on when data comes out. So like this week, it was Wednesday with CPI. Next week, it'll be Tuesday, 10 a.m. Eastern, tune in.
Okay.
With when retail sales come out. On Fed Day, we go live right after the Fed meeting. So whenever that is, so it moves with data, like jobs, CPI are the big ones. But if there's a big, we've done existing home sales when real estate was a big thing. So it depends on what's happening, and we'll have each week usually 2. We might be scaling that back to 1. We'll see. But every week I do like a look ahead, and then something based on it.
Because there's a rhythm to this stuff. Every month, it's the second Tuesday of the month. This comes out, right?
Exactly.
So there's and then what's interesting is like the things that people pay attention to evolve over time.
Yes.
And there were things that we used to obsess over. The unemployment report's a great example, actually. In the recovery from the great financial crisis, every first Friday of the month was unemployment day, and it was a huge deal. Yeah. And now that's not the thing. The thing is CPI.
Right.
And in 3 months, God knows what else it will be. So you guys will adjust to that.
I remember when PPI was a big thing. People were like,
PPI,
I had been telling people like, yo, we got to look at PPI.
Yo, I can't get hyped for PPI. I'm sorry. I do my best.
It's back to being boring now. But like when PPI was going up to, what was it, I think 11 it peaked out at, people were hyped. PPI was trending on Twitter one day. Like that was how.
German PPI.
Yeah, people were really excited about the Deutsche PPI.
German PPI. I sold all my stocks when German PPI disappointed, and I'm still waiting to get back in. All right, so April CPI is the big story this week.
What did you think?
I thought again it was just aligned with expectations. And this has been the theme for I think the past couple months or so. Really, there hasn't been a data report that's really disappointed or whatever the opposite of disappointing would be.
So it's not shocking anymore.
Well, it's such a good point.
Shocking.
Last year when we were getting the 4%, I guess 4% prints was probably 2 years ago at this point, but when we were first getting those big prints, the stock market went wild, the VIX went wild. Now we get 4% and it's baked in, right? We on.
It's baked in and it also is bullish, right? Like you saw this, stock market went higher after that. I think actually initially right after the print, it jumped up and then kind of came back down and then went back up again. But yeah, exactly. Like 4.9, like we're saying 4, but it really is closer to 5.
Let's put this chart up, John. This is consumer inflation. This is year over year. The blue line is prices without food and energy, which is theoretically less volatile. And then the gray line is just plain vanilla headline. So we're at 4.9%. 4.9%. And then the month over month was 0.4.
Yeah.
So that's like what everyone's, to your point, this is just what it is now.
Yeah.
Okay.
Yeah, but it is in line with expectations, but it's still high. Like
you're going to have a 3 handle like two prints from now. Just roll off from, because remember this stuff is year over year. So like we're getting there.
But month over month was 0.4%. It's like not nothing. And coming off such a high base.
It is nothing. And that is kind of the back and forth in markets. And really it's all about stickiness now, which is tough to extrapolate from from a print, right? Is this sticky? Are we going to stick here around 5-4%? And that's the big question, because if we roll down to 3%, I feel like the market's going to go crazy.
So this is not a homogenous report. There's a lot of different categories and subcategories in here.
Yes.
Food away from home is up 8.6% year over year.
That's like Applebee's.
And it was up 0.4% month over month. So it's still going. I got a food truck yesterday. And you know what? I was reminded. I got a food truck yesterday right outside the Salesforce building. I love food trucks. I haven't had a food truck in 5 years, and I don't know why.
I hate food trucks. I'm very anti-food trucks.
What kind of food was it?
Why don't you like them?
I feel like the premise doesn't make sense, because I used to go to food trucks back when this first became a thing in LA. And the whole idea was we're in a truck, so this food's going to be cheap because we know that we can't provide you what you would normally get in a restaurant. But now it's like, the food you're getting out of a truck is twice as much as you get.
I'm glad you mentioned that, because I got like Middle Eastern. It was like chicken kebab over salad with like the white sauce and the red sauce, and I love that shit. It was $16.
Yeah. Yeah,
I saw. How about I think there was a
truck.
Luke's lobster truck with a $30 lobster roll. It kind of defeats the purpose.
But that's my point. So that's up 10% year over year, and it's still going up. Still 0.4% month over month.
I feel like that's just a thing. Like food trucks, I've been anti-food truck for a while, because people just figured out that food trucks are now a novelty, and so they can charge more for them. But that has been a thing. And actually what was really interesting, I talked about this in the live stream, was food at home had been going up a lot faster than food away from home. And actually last month, I think food at home was down 0.2%, whereas food away from home was up. So they kind of flipped a little bit.
Yeah, so food at home, you're right, was up 0.1. Food away from home was 0.4. But not to belabor the food truck point, but you're so right. When we used to be at the other place, there was like the falafels that I would get over rice, and it was like $6.
Yeah.
The good old days of 2018.
The good old days.
Are you talking about a cart or a truck, though? Because I think you're talking about a cart. No. And that's a whole different...
No. I don't with carts.
Oh, yeah. Right.
I'm a truck snob.
Only trucks.
Only trucks.
Right,
let's put up this 1 month % change in CPI. So this is the real thing that really matters. And so 0.4... Last month was 0.1. That was a little bit more benign. February was 0.4. January was 0.5. That's literally from last month to this month. And that's the inflation that people feel, right? Like nobody remembers necessarily what they paid for something last year. But if there's a big material jump from last month, for me, like that's the type of inflation that the consumer really like takes issue with and could have a substantial impact on the economy. But again, this is like within the range that we've been seeing since, I don't know, this is last August, right? So Anything to say about this bottom chart? It's trending in the right direction.
Yeah.
I would say the top chart, I mean, you look at the difference between April 22, May 22, June 22, and then February, March, April. That's a huge difference.
That was wild. June CPI, June 22 CPI up 1.2%.
Right.
And that's over May.
Yeah.
Right.
The month before.
But yeah, look, 0.4,
Well, stocks
0.9.
stocks were crashing.
1.2.
During that period of time. So it actually it made sense, and now things seem to be moderating, which I guess is the whole point. Some of this moderation is coming because financial conditions are tightening, and some of it is just we're not in a pandemic anymore. Those shortages no longer apply.
Well, energy.
Other than labor.
Energy was the big one, right? What was it? Did gas ever hit
we have this. U.S. headline CPI. So services is blue. That's the big one.
I love this chart, by the way. It's a beautiful chart.
Who made this?
That's from Bloomberg.
Okay.
Zero hedge.
I hate this chart.
He actually hates
This chart
it.
is trash. Get this out of here.
I'll do you one better.
Trash ass chart out of here.
Zero hedge tweeted it.
Oh, okay. All right.
It's actually factually incorrect now that we mentioned it.
Yeah. Now get it out of here.
All right. So, food is calming. Everything here seems to be calming down except for services, X, food, and energy, which is sticky. That's the stickiness that you're talking about.
Yeah. And that's exactly the question. Because as you can see, and this is why I previously, before I knew where it was from, said I like this chart. But you can see the services component start to get bigger and bigger and bigger, right? And the numbers are coming down, but that services bar just is going up, up, up. And that's the thing that isn't
right.
Like, it's not exogenous. It's not something that was necessarily, people are going back and paying more for services now because we're more excited, but we're kind of removed from that, right? Like, we've been going out
and the prices aren't coming down.
And the prices aren't coming down.
So look at this, the top 5 individual contributors of U.S. headline year over year. Like, gasoline is not even there anymore. Rent looks like plateauing. I don't know, used cars and trucks, that's negative. What else is in here that's like meaningful? I don't know what all this stuff in turquoise is supposed to be.
So used cars and trucks are down
negative. Yeah.
Are down 6.6% year over year, but up 4.5% month over month, which is really weird.
There was a huge month for used cars. Yeah. And new cars and trucks went the opposite way. New cars and trucks, I think, were down.
Yeah, that's right. Well, yeah, new vehicles were up 5.4% year over year.
We have these month over month. John, you want to switch? So this is month over month, and energy is small. It's not falling.
But the problem is the blue line. So getting back to services, the year over year increase will obviously come down, right? They can't continue to rise at 5% forever. But the prices are not ever coming back down.
Right.
Disney is never lowering their prices.
Yeah.
Like, all of these things that we pay for these activities, ticket prices are never coming down.
That's right.
Unless we have like a severe recession.
The rate of change will slow down, but you're not getting back the prices from 5 years ago.
So the sticky part is the thing.
Yeah, and the other really interesting part about this, right? I could talk CPI all day. I'll try not to, but within CPI, so shelter has been a big part of this consistently. And in that last chart you show, you could see shelter also, the percentage increase going up and up and up. But what we've seen in real-time data is that rent prices are coming down, right? Like, or at least slowing down in terms of the increase.
Right.
But you're not seeing that in CPI, and it's because CPI, like the housing component of CPI, is a lagging indicator because generally we all sign new leases in January, or everything starts in January, and so it just gets fed in over time. And at some point, that is expected because of the real-time data we've got on rent to just drop and really sizably come out of the CPI, and that could make a huge difference. So you could start seeing
that's when we're going to start being worried about deflation.
And
any day now.
And it's so crazy because I literally asked someone from I think it's BLS, Bureau of Labor Statistics. That puts this out. Correct me if I'm wrong. I got a bunch of acronyms in my head, but I asked someone from the agency that calculates CPI. I was like, why is it that shelter is such a lagging indicator and you can't? And he was like, yeah, and he kind of explained everything I said, and I was like, okay, but why can't you guys fix that? And he was like, yeah, we just can't.
Yeah, make it not lagging.
Make it not and
adjust it.
And I was like, is there a way you could explain it so that I can explain for our readers like why it is this way? And he's like, no. It just is what it is.
It's weird. A lot of this data they've been collecting the same way since like the 1960s,
Yes.
70s. And it's just, if you start changing how we're publishing it, you know what's going to happen. Everyone's going to say, oh, Biden wants to report the inflation differently. You know, like it's almost worse to correct it, which is why now you see a lot of economists turning to like apartments.com and they're looking at more recent data to try to get ahead of when that
So a lot of
lag will
people are
catch up.
updating like for Zillow numbers. Like if you include that, it looks a lot different.
And that's the stuff that Jerome Powell is pointing to. He's saying we're seeing this in this more real-time data, and that's telling us that actually shelter inflation is coming down, and so we're not as worried about this overall pace. We think the market is responding or the economy is responding to what we're doing.
Okay.
So it does seem like inflation is heading the right direction. We got PPI data today. Producer prices rose in April at the slowest pace since early 2021. That helps.
Put that up. That's wholesale inflation continues to moderate. So this didn't seem to freak people out as much, but these numbers were every bit as extreme.
Right.
Oh, yeah, they were.
Or more so.
Yeah.
And it led CPI up. So every time you were getting kind of PPI usually the day or 2 days after, and CPI would be like 5 and PPI would be 6. And then the next month CPI would be 6 and PPI would be 7.
Right.
And you just had that consistently happening. And then now it's led it on the way down. And now you see down 2.3%.
Right. So they both peaked, let's say February, March, April of 22, and they've both been coming down ever since, just not as quickly as people would have liked.
Yeah, like I think CPI peaked in June, and I think PPI peaked and then had a little bit more of a pickup there, but basically.
Okay.
And so the market's reaction, at least the bond market's reaction in terms of what does this report do for Fed funds rate for June, people think they're going to pause. So this is the chart on the screen is showing the implied probability of a 500 to 525 Fed funds rate, which is where we are today. And there we are. So it's basically close to 100%. So the market thinks that the Fed is done. Obviously, there's a long way between
100% probability that rates are still where they are now.
Yeah, now
by the end of June.
This literally changes every single day, and June is over a month away. Obviously, I think it's June 23rd. But the market's saying that it's enough.
But we got the employment report. We got CPI. We got PPI. I don't know. Is PCE later this month, or do we have it already?
We get let's see. PCE
You got one in June, but
it's because it comes out as part of the GDP report. But there's also another PCE. There's weird PCE reports that come out. But anyway, the super interesting thing, because I get super into Fed fund futures too, is the market is pricing in a 0% chance that rates will be where they are now, 5 to 5.25, at the end of the year.
Meaning 0%.
All lower. And it's, I think right now the odds are on 75 basis points of cuts.
Yeah.
And that's where, like, I think it's 40 to 50% of the market.
That sounds weird to me. Why do we think people are pricing in cuts? They're not saying they're going to cut. I mean,
they're not. They're saying the opposite. They're saying
5-year Treasury is like a 3.2% yield or something, or 3.6.
You're seeing across the board, like the market does not believe the Fed is going to hold. And it's when we're getting to the point where the rubber is going to meet the road. A thing that I said on my live stream a few weeks ago was at the most recent Fed meeting. I was like, all right, the easy part's over now. Because it was like, inflation's rising, it's getting out of control, it's all anyone can talk about.
Just
you got to
raise rates.
You got to raise
It's
rates.
obvious.
Right?
Okay.
It's obvious. So now they've gotten to the point where, and we're going to talk about some other things that I think play into this, but now, inflation's coming down. Right, you've got unemployment starting to pick back up. You've got these banking crises and all these other things. Now you got to make decisions. Now you got to say, what do we prioritize? Because we got two things happening here. We got the economy kind of starting to deteriorate. A lot of these Fed manufacturing surveys, a lot of PMIs, all those things really starting to look pretty bad. And then but you also got inflation, CPI at 5%. So now what do you do? And this is the hard part.
The hard part is like, do we stay? So we're not raising anymore. Okay.
Yeah.
Do we stay here, or do we start to cut in advance of what looks like a recession in 24? I mean, is that the because there's no sign
they're
of
not going to do that.
There's no recession this year, and the Fed almost always reacts and is not proactive. So it could be a while before those cuts show up.
It could be, and I think that makes a lot of sense. But again, the market is very clear on this. Like you look at the bonds. You were just talking about the 5-year, 3-year, like very clearly showing they do not expect the Fed to hold here at 5.
Yeah, the 2 years 3.9.
Right.
So one of the biggest market moving events is every time Powell's on stage.
Yeah.
Right. Every time Powell's on stage, the market does what it does. Value Stock Geek has a hot take on the Fed. He said, this is a guy on Twitter, the Fed should be less transparent, less guidance, less speeches, no minutes from meetings, just brief press releases announcing actions, and keep it all behind closed doors. all of the speculation around statements is a waste of time for everyone involved. I think I really agree with that last sentence.
How long have you been listening to me say this? Like
Wait,
the
so
Fed should just shut up.
What's this guy's name?
Value Stock Geek.
Value Stock Geek. Is that Alan Greenspan?
I think it's.
I swear to God, I think it's Greenspan.
It might be Greenspan's
I think
burner.
it's Greenspan's burner. Yeah, I think it is. Or maybe it's Powell's burner. You guys know Powell
but
has a
that's
burner,
how
right?
Greenspan used to roll.
Right, exactly.
You'd
That's what
hear
I'm saying.
from him twice a year. He'd do Humphrey Hawkins' testimony.
Yeah.
And then when they did a rate hike or cut, he would explain it in a statement. You'd have to read it.
Yeah.
So somebody on CNBC would read it. It wasn't even English.
Yeah.
So Dion, is the Fed too transparent?
Too much talking.
Ooh, that's a great question because they're doing this because they want
They don't want
calm,
to. Yeah.
they want calmer seas, right? They don't want all this crazy, people freaking out. They want to give you as much advance notice as possible. And what we haven't seen really on Fed days though is just the market freaking out after a cut or a hike. It's like generally it's priced in, and if they do a little more, you get a little more reaction. If they do a little less, they get a little less reaction, whatever it is. But the point was to calm things down, and I don't know that that's necessarily worked.
Well, this is a tradition that's recent. This is Bernanke started the press conferences. They would do something with rates, and then like almost after an NBA game, you'd come out and say, all right, here's what we're looking at. And then he would read a statement, and then the Q&A. That's all in the last 15 years. They weren't doing this prior, and they could stop.
They could. And Powell's the guy who started doing them at every press conference. They didn't used to be every press conference.
It used to be this is a live meeting or this is a press conference meeting. Now it's every time.
Did
Every single
Yellen do
meeting.
it every time?
No, Yellen didn't. No, Powell's the one who started doing it every meeting.
Yeah.
Yellen did it, I think, 4 times a year. And Powell was like, no, not enough.
Also,
every meeting.
when Yellen spoke, because it wasn't 40-year high in inflation, like it wasn't all eyes. You know what I mean? It wasn't like must-see TV like it is now.
Right. It's weird the things people want to watch, because I remember I used to be a sports reporter, and I would go to these press conferences with these coaches, and then they started putting them on TV, and I was like, why does anyone want to watch this? Like, I go because I need to write an article, and I need quotes from this coach to fill out my article. And I feel kind of the same way about the Powell presser. Like, I watch it because I need quotes. I need to see what the chairman says so I can contextualize.
Did you ever get sent to Washington to be in the room?
I've never actually been in the room in DC. I was on the Powell presser like when they were doing it virtually.
Oh, yeah.
I was one of the I was in that, but I actually went to DC for
Who
it.
does the Journal send these days? It's
Woj?
not Hilsenrath
Timorous.
anymore.
No, Timorous.
I just called him Woj, by the way, by accident. So no, because we call him Fed Woj.
Fed Woj.
Fed
yeah.
Woj.
Yeah, he's Fed Woj.
So getting back to just this inflation, John, if you put this chart on, please, of the wages. Obviously, wages are a huge component of inflation. I don't know if wages drive inflation or if inflation drives wages. But the good news is, I guess just strictly on inflation, is that we've got Bank of America data on after-tax wages and salaries. And they all peaked about 2 years ago at this point.
It's like 21.
And so they break it down into people that are making less than 50,000, between 50 and 125, and over 125. And they're all going down and to the right, with the 125 and above category negative year over year.
So if you make over $125,000, you're this yellow line.
Yeah.
And that is now negative wage growth for that group.
So when does this hit services? When does this hit the economy? Does it not? Is this just a normalization of an aberration?
I actually don't know that it can't be both of those things, like the normalization of an aberration and also it hits services. I think we've been in this environment where people had a lot of built up savings. People, they put a lot more aside because you just couldn't spend the money, right? There was literally, you couldn't go outside. You couldn't go to a restaurant. You couldn't go to a bar for a long time. And then I think for a while people were afraid. People didn't want to go to bars. They didn't want to go to concerts. They didn't want to go to NBA games, right? And as that's slowly reduced itself, you see people, okay, now I want to go travel now. And you had a big rush. But folks' wages have not kept up with inflation, right? Like we're just now getting to a point where CPI and the wage growth are at similar
even
levels.
At the low end?
No, at the low end they were, which is
at the low end,
Those were huge jumps for hourly workers at the low end of income.
There were, but I mean, you're talking about someone who was making like minimum wage.
Yeah.
And then that person now is making, like instead of $8 an hour, they're making 10.
16.
Well, no, I mean, if you think about
Amazon,
the jump
it's
from like 8 to 10,
Yeah.
that's, what is that, like a 20% jump?
Yeah.
My quick math is bad. But that's
Yeah.
a 20% jump. That's double CPI at its peak.
But it's right. But the dollar amount is small.
The dollar. So that's
right.
what we were talking about. We were talking about those folks, right? Those folks going from 8 to 10 or 12 to 14 or 12 to 15 even. It's gonna help you out in your life, but it's not from the economy side or from the, big picture macroeconomics. It's not gonna make a big difference.
Right.
One thing I do want to point out, though, because we didn't talk about it in this, was we are right now on pace looking at earnings from Q1. Corporate net profit margins are expected to pick up for the first time in 7 quarters, I think. You had 6 straight quarters of declining from the record.
Yeah.
So the record was 13% net profit margins for S&P 500. We are picking up now. I think we're on pace to do 11.5% for Q1 23, which would be the first increase in 6 quarters. And that actually, I think, will have a lot more to do with inflation. If inflation picks back up, because you've got now companies with more pricing power and executing that pricing power.
Yeah. Oh, they've done a great job. U.S. companies have done an amazing job keeping up with inflation.
Absolutely.
Yeah.
They've actually outpaced inflation.
You could say that
Pretty significantly.
they poured gasoline on the inflation fire because they kept raising prices.
Right.
All of the companies in the consumer staples that continue to raise prices, look at their stock prices. They're on fire.
Yeah.
Pepsi and all of them, they're on fire. So we're getting some signs that the economy might be softening. We had U.S. jobless claims today jump to the highest level since 2021, right? So it's notable. It's not like you would have to squint if you zoomed out to see it.
That is going.
But it's going. It's a breakout.
Yeah.
It's a breakout.
So what is this? 264,000 initial jobless claims last week.
Yep.
And what was it a year ago, roughly?
200. I mean, it's yeah.
So it's a new range.
But again, these are historically low levels.
Yes.
Yeah.
Right, and unemployment is still historically low. But you've got that. You've got copper breaking down, having one of its worst weeks in the last couple of years. I mean, not last couple of years. I think it's worst week in maybe a year. I don't know if copper means anything. It's
You say Dr. Copper.
Dr. Copper.
I'm not saying it. I'm not
finding you.
I'm not saying it. I'm not saying it. I'm just saying, but I'm not saying it.
I'm finding you for sure. Okay. What's this one? This is gold?
This from Dion.
Let me say.
Oh, this is my
This is large versus small.
Yeah.
Yeah. This is a big one for me also.
Maybe
Dion.
so. Are these companies that can do have pricing power versus those that don't?
I think this is actually an expression of worries about the recession. So I think what we're seeing is,
I agree.
rather than folks kind of piling into treasuries, they're kind of piling into big tech. So
this is the Qs.
Yeah,
Way outperforming the S&P year to date, and then the Russell 2000 is actually negative this year,
Right.
And just looks horrible. And I 100% agree with you. Like, it's just money flows into the equities of companies, and they're starting to use mega cap tech. I don't want to say as like a safe deposit box because it's still volatile, but it's almost like Apple will be fine.
Right.
That's the mentality.
Apple will be fine.
I
Yeah.
think that's like 60% of it. And maybe the other 40% is these companies, not Apple, got the shit kicked out of them. And they were really good at writing things and protecting their margins and cutting in efficiency. Facebook fell 75%.
Yeah.
Amazon got more than cut in half. Google was down 45%.
Yeah, it's a combination.
And
I
so
agree.
it's also a bit of a snapback.
Where these stocks are coming from.
Yeah. So it's both. It's both
Yeah,
things.
agree with that. 100%.
Why can't we just take all of the data that we all discuss and feed it into
The blockchain.
AI?
There you go.
Like,
That's the new. Yeah, that's what's out.
My
Come on
bad.
now.
let's say you took
Yeah,
let's say
blockchain.
you took 100 years worth of all these economic data series, and you fed it into AI, and you said, "All right, now you have everything. Go back, look at what would have been optimal monetary policy based on these 50 data points on the economy, and we'll just have a committee of humans who once a month look at what the algorithm says to do with interest rates."
Do they have to follow it?
No, but it's strongly recommended that if they're going to deviate from what the AI says,
You mean dissent.
That if they're going to dissent versus the AI, they better have a damn good reason, like a bank run or something exogenous that's not in the data. But if not, like, the AI is better than this committee of 12 people who used to be professors at Princeton. I mean, I'm just spitballing here, but it's like a Star Trek episode where they land on a planet and there's no government. It's like a
Star
computer.
Trek. How old are you?
What do you mean?
You're old.
Star Trek's on like now.
Stop.
No, but like you land on a planet and there's a computer determining what the laws are, and the inputs are, this is how the least amount of people get killed. So these should be the rules. So if I would just be curious to see. Let's not put the AI in charge. Let's just run it in parallel with the Federal Open Market Committee and see how far apart they are. Wouldn't that be an interesting experiment?
So I'll say that is from Star Trek, but it's also from Idiocracy. Like that thing that you
and maybe it's not so good.
So there's they're preferenceable, but no, I think you're onto something there, and I think it's kind of the same reason it's taken MLB like 20 years to get an automated strike zone. We still don't have an actual audit, and even though we've seen very clearly that
what is the reason?
We don't need umpires. It's just tradition.
Right,
tradition.
Exactly. And I think that you'd get that same pushback with the Fed, except for they'd make the case that
no,
the economy would
it's like the illusion of control.
No,
people
but
want humans. People want humans with their hands on the steering wheel.
Well, let Powell do the press conference. I'm not saying like shove the AI in everyone's face, but just like the
Just
committee.
have it. Don't tell anybody.
Instead of the committee parsing 50 different things, we let the algorithm do that, and then the committee can dissent or agree with the AI.
You know what the best algo is?
And then do the press conference.
The best algo is the 2-year. How about they just follow that?
Just follow the two.
But it's not an algo, it's people.
Exactly.
Yeah, but so they have like a human AI, which is all the researchers who you never hear about at the Federal Reserve.
Can throw it out. It's not working.
Throw
We have a
those guys
boom and
out.
bust cycle every 7 years. What do we need it for? I mean, it's great. It's good content.
Yeah,
but
that's a lot of economists out of work, man. I don't know who's going to
Actually,
back
hang
that.
on. The economy has been incredibly steady ex the pandemic for the last 20 years.
Because you printed
Well,
$11 trillion.
13, 15. Yeah, my bad.
Because you put opiates into the system.
Right, 10 trillion.
You-
The nine, let's be honest.
Between the Fed, the Treasury,
Okay,
all the congressional programs,
Right.
It's like a lot of money.
It is a lot
that
of
we
money.
threw. It
And
would
the
be
San Francisco-
remarkable if it weren't steady.
The San Francisco Fed is estimating there's another $500 million worth of excess savings that will be burned off by the end of the year.
Yeah. And
Yeah,
that's actually a little rosy.
What do you think? That's optimistic?
I think that's optimistic, yeah, a little bit.
Fine, but I've said this before, but it is a bit ironic that the thing that caused inflation, which ostensibly will cause a recession, is the one that's keeping the recession at bay, right? It was the fiscal stimulus, all of that money. Obviously, supply chain had a lot to do with it, but all of that money really caused the inflation. But all of the money is continuing to allow people to spend, which is keeping the economy afloat. It's very odd.
Druckenmiller says U.S. on brink of a recession, sees hard landing.
That's not like him.
He was at Iris Own investment conference, which I guess they do virtually now because I didn't get invited. I am predicting something worse than 2008.
He did not say that.
Oh, I am not. Excuse me.
He did not say that.
You're right. I am not predicting something worse than 2008. Druckenmiller said. Yet to be a good risk manager, quote, it's just naive not to be open-minded to something really, really bad happening.
I only know that he didn't say that because I saw a clip.
No. I feel you.
I saw a clip of him saying, "I am not saying this is worse than 2008." So don't isolate.
No, that's
that. Yeah.
literally what he said. I'm not predicting something worse than 2008.
And you said no one was predicting a recession this year.
Every economist.
I got.
No, it's for real. In the beginning of the year, towards the end of last year, that was all we were talking about. Was 90% of economists agree a recession will come.
Yeah, I did an article about that. I interviewed all the banks that are primary dealers. I asked them, "Do you predict a recession?"
Was it legit 90? It was close, right?
I don't know. It was 90.
Okay, but it was off the
most.
charts.
Yeah, it was like most.
You talked to the chief economist at every one of those banks?
I talked to someone who could tell me what the chief economist, like whatever their official opinion was, if they had a house view, like whether was it recession or not.
Can I ask you a question? Why wouldn't they predict a recession?
Well, because why would you? Because if you're wrong, you lose more for being wrong.
No, you don't.
Yeah, you do. For sure.
No, if you say no recession and there is one, you're fired.
Yeah.
If you say yes recession and there isn't, you say, well, the economy is stronger than we thought and carry on.
There's no reason to be a contrarian if you're an economist going into 2023.
And why be a bull?
Yeah.
Who does it help?
It's no upside.
Who does being a bull help? It helps if you're right. Right? It's like the payoff if you're
asymmetric.
right.
It's asymmetric.
But I agree it's asymmetric. Yeah.
It's asymmetric because if you're bearish and wrong, not like doomsaying, but if you're just like, yeah, I'm concerned about the economy and then things work out okay, nobody gives a shit. No one's mad at you.
Right.
But if you're like, everything's fine, what are you talking about? And then you have a recession, you're out.
But I think you're comparing two unlike things. And this is a thing that us journalists get annoyed by because what you're saying is
yeah. Michael will stay. All right, go ahead.
No, what you're saying is a hard no recession versus a wishy-washy, I think this could be better. yeah, you're going to get pounded
Agreed.
more.
That's
so
true.
that's why every economist tries to take this, well, I think under these conditions, perhaps under, in this case. However, on the other hand.
The job is not to be right. The job is to keep your job.
Yes, the job is to keep your job.
I understand that.
So it
I'm a
was
financial
hard. So I
advisor.
think
get
when a lot of, yes, exactly.
Right.
I think when a lot of these banks come out and say, we think there's going to be a recession, I think that's meaningful.
Okay. All right. Well, we had a lot, and they're still saying it.
And they're still saying it, yeah.
And eventually there will be one. If they keep saying it long enough, it'll happen. Can we talk about the banks? So are you having fun yet?
I'm having the best time of my life.
All right. These are tweets from you. Okay. If you're wondering which banks are next to be tanked by investors, here's a list of the banks still in business with the highest percentage of uninsured deposits. That's deposits in excess of $250,000.
Yes.
You have East West Bancorp, which I think has a lot of Asian money in them. I don't know if it's overseas or what is the makeup of that bank?
East West Bank. No, it's the East West Bank, right? Like it does cater to a lot of Asian money, but it's a bank. I think they're headquartered in California. I'm not entirely sure, but they're it's just
67% of their deposits are uninsured.
Yeah, as of 12/31.
Comerica 64%. What's up with that?
Oh wait, I have a dumb question. If you haven't moved your money yet, and you know that the
it's
powers,
still going.
No, I know. PacWest this morning and released it was like 9.5%. But you know the government is not going to let you lose your deposits. So why bother?
I think because maybe you don't know that,
but you do.
Yeah, probably. But it's probably. It's not for sure. It's probably.
All right, here's today.
Good.
Regional bank stocks plummeted again Thursday after troubled California lender PacWest disclosed it lost 9.5% of deposits last week. Okay, let me unpack this. This is a Beverly Hills-based bank. So Silicon Valley Bank blew up on March 10th. It failed on March 10th. So PacWest stock took another dive last week following reports it was weighing a sale or a capital raise. Those headlines, PacWest said in an SEC filing today, heightened customer fears of the safety of the deposits. The majority of the 9.5%, when they say 9.5% drop last week,
that's a lot.
That's almost 10% of the deposits in the bank left. They said the majority of it happened on May 4th and May 5th. So in 2 days, this is a bank seeing 10% of the money leave. What the hell kind of system do we have here?
So this is kind of interesting. Mark Rubenstein did a great piece on PacWest, and the stock is down 23% today. KRE.
Is that it?
KRE, which unfortunately, I'm probably overstaying my welcome in that ETF. I do own it. Is only down 2.2% today. So maybe it's like some of the contagion is behind us, and it's just being isolated at this point to the banks that have all of those uninsured deposits.
Yeah, that was why I wrote the tweet. But then my next tweet, which I also included.
Oh, let me finish your tweet. Okay. So you named Comerica, Western Alliance, 55%, PacWest, 52%, Zions, 51%. That's the percentage of deposits that are uninsured. Your follow-up tweet was, here are the banks that had the highest share of uninsured deposits as of 12/31/2022. Silicon Valley Bank, 97%. Signature Bank, 90%. First Republic, 68%. And they're all gone. Okay.
Right. I'm not saying anybody deserved to lose money, but however, why?
Hear me out.
Why would you have $3 million in a checking account earning zero when the Fed funds is at 4.5?
You want to know why?
Yeah. What, mortgages?
Because you're the founder of a company.
All right, fine.
You parked the money there, and they gave you a sweetheart mortgage.
I get that. I do get that. But for everybody else who's not the founder, what's going on?
This is the thing I could not answer for you. I wish I knew the answer. I thought that myself. I mean, they did this story about how Giannis has like 52 bank accounts with $250,000 each.
I believe it.
I feel like if I had Giannis money, I would do something similar. I would invest a lot more of it.
He's also European.
He's
what
Greek.
went on for the last 10 years.
Yeah, it's worse than European. He's Greek.
Yeah.
Right. So I totally understand that.
Right. So I mean,
and by the way, just that comment, I'm talking about the Greek banking system.
Yes.
Oh no.
That's not an ethnic
Greek
thing.
community will respond.
We love our Greek viewers.
No, I had kebab yesterday. I love Greek food. Are you kidding me?
I'd like to distance myself from Michael Batnick right now.
It's very tough. We're in a small room. All right. Commercial real estate. Do people ask you about this every 5 minutes?
Surprisingly, no. I honestly am kind of disappointed. I don't get.
Do you have like a
questions
strong
about it.
opinion on this or not really?
I've been saying to watch this sector for about a year now, and nothing has really happened. So I've just kind of stopped talking about it. But now things are starting to happen. And it's kind of the same thing as what you were talking about with unemployment. Like, it's not the level, it's the direction, or it's the trajectory.
Direction is bad.
Yeah, the direction is bad and the trajectory is bad.
So two things. One of the things why nothing's blowing up yet is that these buildings are owned in like a separate LLC.
Yes.
And the quote unquote owners, it's like pooled capital. It's rarely like a Jared Kushner
asset
family.
managers.
It's asset managers. Everybody owns a small amount of everything. So that's one of the things. So if one building in particular is a problem, it's like affects one LLC and not like a big corporation per se.
Yeah.
So that's one thing. Second, the owners of these things are in court for 3 years before they actually lose the building.
Yep.
This is not like a mortgage on your house or a car that could be repossessed. You really have to fight like hell if you're a creditor to get an owner out of their ownership of a building. So the pace of this is glacial relative to other things like a bank that blow up.
Right. And I started trying to write this story and I found out those things, and also just how long a lot of these leases are and how hard it is to get out of those. Just make it so a thing falling apart in an instant that would make an interesting story.
And it's not going to happen that way.
Doesn't, right. And so that was why I just didn't write a story about it, because
in Austin Powers where he's like screaming no and there's like a bulldozer that's like moving very slowly towards him.
Yes.
I mean, it's not cinematic.
Right.
The rate at which these buildings are going bad. I mean, San Francisco maybe is a little bit more
Josh
dramatic.
said San Francisco is a zero.
No, I said what if a city goes to zero? I didn't say
he said
they would.
San Francisco's going to zero.
Don't try to deflect what you just said about Greek people. All right. Robinhood earnings came out today or last night.
Last night.
The stock went up today. Do I have that right?
I think the stock, let's see, let's take a look. Stock's up.
What do you
All
think
right.
about 24-hour trading?
So we're going to go there in a sec, but let's just look at the earnings. They lost 57 cents a share. The expected loss was 62. So
pretty good.
It's basically a blue chip. Revenue was better, 441 million versus 425. I thought this part was interesting. Payment for order flow remains a significant part of Robinhood's business, even as it has begun to make more money from other revenue streams, such as, you guessed it, collecting interest on customers' cash balances. No run on Robinhood's bank. During the first quarter, the company earned 36% of its total net revenue from payments for routing stock and options orders. All right, so one, I thought that was a much bigger part of Robinhood's revenue. Didn't you?
Yeah.
I thought payment for order flow was like 90%. Did you know that? It's only about a third at this point?
But I'm just pulling up the slides from my sweet quarter app. That's because net interest went from zero to, what was it? Yeah, $208 million. Well, not zero. It was like 60-ish a quarter in 2021. It was $208 million.
The irony of the Fed raising rates and that being the
Saved
thing that
Robinhood.
bails out Robinhood
Bails out
is
Robinhood.
amazing to me.
That's incredible.
It's like pretty poetic. So in other words, the Fed jacks rates up 500 basis points, puts legitimate banks out of business, legitimate in air quotes, and turns
That was
Robinhood
your
into a
statement, not
double-digit stock price again. I think that's kind of funny.
That's poetic.
It's
Let's look at some of these charts. I actually love Robinhood's slides. It's very, very clean. We're looking at net cumulative funded accounts, and it's just flatlined from Q2 21. It's stagnant.
Uptick.
What's that?
Uptick. They added 120,000 accounts in Q1. It's not nothing.
Stop. I mean, fine.
Stop.
It's flat.
Where are they finding 120,000 more kids that haven't
It's
lost all their
flat.
money yet?
But look at the monthly active users. So again, it rebounded, but 21 million at the peak, and you guessed it, 2021.
Can I tell you something? This is going to move with the market at this point. Unless there's another meme frenzy. Basically, Robinhood new accounts are going to be a proxy for how did the S&P do last
I think
last
there's
quarter.
a floor. I don't think it's going to go below 11 million, like give or take.
I don't think so
Like
either.
we already got the washout. If the market falls on 30%, it doesn't matter. These people are still trading. There's another great chart. Listen, this is credit to them and credit to corporate America. Their adjusted EBITDA bottomed in 2022, and like every other company on Wall Street, they got religion, and their margins are up and going in the right direction. So yeah, they're still losing money like on a cash basis, but
It's not as right, but it's just not as bad as you would think. Single digit stock price, no meme stocks to trade. They're making money on other stuff.
they aggressively cut their stock-based comp, which was completely out of control.
Yeah.
But they did announce, to Duncan's point, what did they announce? 24/7 trading?
Well, so I hate this because I'm a Gen Xer, and so I knee-jerk hate everything that didn't exist when I was 23 years old. Maybe I'm open-minded to maybe being wrong on this, but they want to do 24/7 stock trading. I guess all the counterparties would also have Robinhood accounts, and they would probably make you sign a waiver. Like, I understand that these are illiquid markets, and maybe my execution won't be optimal.
They'll update their terms of service.
They'll update their terms of service, and the people that are so desperate to get a trade off on a Sunday morning will be able to. Maybe it's not the worst thing on earth. I don't know. I just like things the way they are. So what
That is very Gen X of you.
it is. You got to take on it. Like, leave it alone. It's fine.
Nah,
Does anyone want to watch stock prices 7 days a week like it's crypto? Does anyone really want that?
Yeah, I think because that's who their user base is.
But do you know that? Do you know? Does anyone realize how important that circuit breaker that we get every night is in volatile markets? How amazing it is that, like, the bell rings at 4 o'clock. There's two hours of aftermarket activity, and then it's almost like fighters return to your corner, ding, 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 and you get a break. You get 8 hours to fight with your wife, go to sleep, wake up the next morning, and, like, do I still want to panic sell everything I own?
Who's making markets at 2 a.m. Eastern time?
Literally probably like Binance type people.
Here's a quote.
People who are gaming other people.
I saw Meb Faber tweet this today. This quote is probably close to 100 years old at this point. Oh. It's from Edwin Lefevre, who wrote Reminiscences of a Stock Operator.
Lefebvre. I'm sorry. I'm not doing it on purpose, but it's definitely not the fever.
I'm just reading what's on the screen.
Okay.
Sorry.
I was in France recently. I think we could take my word for it.
No, I actually mispronounced it. It's Lefebvre.
But it definitely is not pronounced that way. I know it's
Les jours c'est je parle le français, nous parlons français, tu ne parles.
All right, take it back.
Avec mon cheval, je parle Allemagne.
Ouais.
Avec les dames de la cour, italien. Mais pour parler avec mon Dieu,
all right, John, turn his mic off.
Je parle sous le monde en français.
All right, the quote.
No, he challenged me in French. You don't even know what's going on.
Non, je peux parler français aussi. C'est nous pouvons parler toutes les choses, toujours.
Got it.
Mais pas.
All I can think of is Talladega Nights.
All right, what do you got? Read this quote before we forget what we were talking about.
The quote is, anything that helps make addicts out of occasional traders should be avoided as if it were the bubonic plague.
Well, that's what this is. Yeah. Sorry.
But that's their business model.
Yeah.
Right?
They need like addicted behavior.
Right. That literally is Robinhood's business model. I don't think that's controversial to say.
No.
They need people to trade because that's how they make their money.
Yeah.
Agreed. So anyway, I hate it. Maybe it'll happen, and 2 years later I'll get used to it and I'll be over it.
You know what? I don't think that many people are going to be doing this.
This is how it starts.
Wait, by the way, what starts? What is your fear of this?
So my feeling is, so when the market closes and there's like a frenzy going on, good or bad, people need a break. Like, I don't think it's healthy for people to be trading all day long, even if it's just 5 days a week, when right now it's enough with the trading. You got 9:30, 4 o'clock, there's pre-market, there's post-market. Enough. Like, stop. Everyone put pencils down. Tomorrow's another day. You can wake up and maybe feel differently and calm down. When we get these like really volatile markets, I think people are going to wish there was a break. And if you're a professional doing this, now you have a responsibility to monitor what Robinhood traders are doing at 9 o'clock at night.
How about this? Josh is right in the sense that nobody who's trading in the after hours, whatever the hours may be, is going to make money except for the market makers. Right?
Consistently.
Like, people are going to lose money doing this. Robinhood will make money, market makers will make money, investors will lose, or gamblers will lose, because that's what we do.
That's what happens.
Yeah. Now you're going to have to start making videos at 8 o'clock at night. For the
No, that's what's not happening. I will say you sound a bit like my dad complaining about the rappers with the gold jewelry.
I'm very aware. I'm very aware that that's where I'm headed.
And the low pants. Why they don't pull their pants up?
Yeah. I know where I'm going.
You know what? Josh acts too old and too young for his age.
Yeah.
It's very interesting.
Yeah, I'm a bit of a mystery. I got to ask you about this because this is crazy. And I didn't even know, I'm not on Twitter, so I didn't even know that this took place. But we were doing research on you to do the show, and you got arrested or handcuffed or something.
What?
This thing.
Okay, I don't want to.
Batnick's
What did
general
you
response.
do?
I love the genuine response.
I don't want to tell the story, and I don't want you to have to like tell a whole long story. But like, just explain, because this is, and then you got an apology from the mayor. This is a big deal when it happened.
Well, no, when it happened, it wasn't a big deal.
Okay,
It was,
the aftermath.
yeah, the aftermath.
Okay,
was
so you
the whole
killed
thing.
5 people, and then what? No, what? Tell us what happened, because this is nuts to me.
No, I was at a Chase Bank in Phoenix. I'm gonna call them out by name. I was at a Chase Bank, outside a Chase Bank in Phoenix. I was doing a story about savings accounts. And literally I was just trying to talk to Chase customers because I was like, the story was, why do customers at the big 5 banks, like your Wells, Chase, all those, why are they still here instead of moving their money? Because I'd calculated how much money these people could have saved if they have not kept their money at the
When
big
is it?
5.
Is this summer?
This was in November.
November of last year.
November
Okay,
last year, yeah,
Okay.
November 22. So at this point, interest rates are going up. Like you're getting 3 handle probably or 4 on a savings
These
account.
people getting 10
High-
basis points.
Right,
So
exactly.
why? All right. So why?
So why? And one of the things we're doing as journalists is just like, let me go actually talk to people, right? So I literally went to a Chase Bank to be like, hey, person who is a customer at Chase, why is it that you're choosing to keep your money here? And I, eventually was able to talk to people, and they said, it's the ease. I don't feel like I'm losing, so I'll, whatever. So I'm there doing that, and at some point, the manager of the branch calls the cops and says, "There's this guy out here." He says, "He's a reporter," because she sent kind of 2 of her.
You in the bank or outside?
I'm
the bank?
outside the bank on what I thought was a public sidewalk. Apparently, it's a private sidewalk. Chase owns the sidewalk.
Oh, you don't want to do that.
Is what I learned.
Were you by yourself with the mic?
It was just me. Like I'm a print reporter, so I just had a recorder.
Okay.
Right. So I don't have a.
You
microphone
and Ben
with me.
always wonder, where do these quotes in these Wall Street Journal stories
do.
come from?
I do.
He's telling
I
you how
do.
the
I do.
sausage is
Yeah,
made.
we just hold a recorder and I ask you
Right.
questions. So I'm just out there, and they a couple guys come out and they say, "Hey, what are you doing?" I tell them I'm a reporter. I'm working on a story. I'm just here interviewing people, and they're like, "Okay, can you not do that?" I'm like, I'm over here on the sidewalk, and they're like, "All right, well, we're gonna have to go in and call somebody and see what's up." I'm like, "All right, cool, do your thing." And I will say the background on this is I've done this, for years. Like being a reporter, sometimes you go out to a place, ask people questions about the place. Hey, this sandwich shop has listeria. Why are you still eating here? Or whatever.
Sometimes you have to break bad news to people.
Yeah, right. And but it's part of the job. And sometimes you see the cops. They're like, "Hey, man, you can't be in front of the door, or you can't stand here." And so I'm thinking like, whatever. So cop shows up, and he goes in the branch. I see him. He comes out. I'm thinking he's I think I'm on the sidewalk, so what can he really say to me? And he's like, hey, they want you trespassed. And I'm like, what does that mean? He's like, they want you, banned from here, and if you come back, you're going to be arrested. And I'm like, well, that doesn't make any sense. Like, if they asked me to leave, I would have left. Like, no big deal. And he's like, no, well, they did ask you to leave. I'm like, well, they didn't. Anyway, 10 seconds later, he puts me in cuffs. And I'm like, oh,
Wait,
listen.
you had identified yourself to somebody in the bank that you're a
Yes.
reporter for the Wall Street Journal.
Yes.
And they call the cops anyway.
And they call the cops anyway, right?
Okay.
You have to keep in mind, like, for people who are just listening to this, I'm a black man and a large black man. So, like, the idea that I'm a reporter for the Wall Street Journal, hard
so
for
you
them to
think
believe.
You think there's some element of this where they don't even believe you?
So I don't know, because no one ever asked me. No one said, hey, are you really a reporter? Do you have credentials?
So
Can
you
you show us
volunteered
something?
that.
Yeah, I volunteered, because I was telling all the customers, I'm like, hey, I'm a reporter for the Wall Street Journal.
Right.
Can I ask you, do you have a savings account here?
Okay.
And so I told him, like, yeah, hey, I'm a reporter with the Journal, et cetera, et cetera. So the cop comes back. He doesn't even actually ask me. He just tells me they want you trespassed. I'm like, what does that mean? He's like, they want you banned. And I'm like, well, we don't need to do all that. And he's like, yeah, we do. And like I said, really within, I think, because they've calculated this, a couple of stories that have been done, it was like within 90 seconds or something, he puts me in cuffs. I'm like,
Holy
listen,
shit.
I will leave here. I'll leave here. If you say I got to go. That's fine. I'm not resisting. I'm not refusing to leave. I just, don't understand what's going on. But he puts me in cuffs and like starts trying to take me to his car. And I'm like, I'm not going to go get in your car. And he's like, yeah, you are kind of. This story has been very well treaded over time. So people who want to read about it
Like
can.
he's going to take you somewhere?
Yeah, basically.
Like he's going to book you?
That was my thinking.
Holy
and
shit.
so I'm just like, yeah.
Tell him you're a reporter?
Yes, I
Okay.
let him know. And so this woman who comes out of the bank, she starts recording. And I'm like, That's great. Thank you very much for that. And she's like, what's your name?
Document
Yeah, I'm like, document this, please. Yeah, that's great. And, I'm telling her my name. I tell, she's like, I heard you say you're a reporter. I'm like, yeah, I'm a reporter for the Wall Street Journal. I tell the cop I'm a reporter for the Wall Street Journal.
So you should have said Fox News. They would have said, have a nice day, sir. All right,
I'm sure.
Keep going.
That was a mistake I made.
Okay.
But yeah, so eventually it turns out that they just, he lets me go. I don't know if he wrote me up or whatever, but I don't actually get arrested or charged with anything.
Okay.
They just kind of let me go.
But now there's a video of it, so that's like then it gets a new life.
So actually, the way it got a new life was a reporter in Phoenix found out about it. I don't know if it was from the person recording or someone, whatever. And he reached out to me, and this is January at this point. So the Journal had sent a request for our editor-in-chief at the time, Matt Murray, had sent an email to Jamie Dimon, actually, emailed Jamie Dimon himself and emailed the chief of police and some other people hey, what happened? We don't think this is okay. We want to know what's your response?
Oh, that's cool. They had your back.
Yeah,
They wanted to find out what happened.
They went back, and Chase, to their credit, 2 days after that, we all got together and whatever, maybe a week later.
They raised their deposit rate.
Immediately.
Just for you, though.
That'd be great.
Deposit rate is 18%.
That'd actually be a great way to say you're sorry.
So what do they do? They have corporate comms.
Yeah, their corporate comms chief called me and he said he was sorry. He said they're training people over there. He understands that's not the way that these things should be handled.
I mean, I'm sure they were humiliated. The corporation, I'm sure they were humiliated.
Yeah, they genuinely felt bad. And then after the story came out, the mayor of Phoenix emails me actually. He says, we're sorry this happened. This shouldn't be happening. We've reviewed the body cam footage. The only people I still have not heard from, and we're still pushing,
people that work there,
is not the people that work there, but the people the police department, the officer involved.
Go Nuggets, the Suns. Am I right?
Yeah. Oh, so this is personal now.
It's always been personal, Josh.
Unbelievable.
All right, just imagine a world where you could get handcuffed for literally doing your job, and I don't have to imagine. You don't have to imagine. I was reading these stories and I'm like, wait a minute, really? What the hell is this about?
Yeah, and if for anyone who's no, that's not what happened. The body cam footage is online.
But wait,
you can watch it.
You did not that day get footage from this woman who filmed it, upload it, and say, I was arrested today, but
no.
This just came out 2 months later. You're saying, oh, that's crazy.
It came out 2 months later, and then people started calling, and I talked to the reporter in Phoenix who first broke the story. I did an interview with him, and then I didn't do any more interviews after that because it wasn't the thing I wanted to talk about.
No, I don't blame you. I'm sorry for bringing it up. I just thought it was a wild story. Is there any takeaway from this that is relevant or anything you want people to know?
I mean, racism is real.
Yeah, I guess. I thought that was nuts. We'll end on a lighter note. Are you going to call her Liz Holmes, or are you going to stick with Elizabeth Holmes? What do you think?
I'm sticking with Elizabeth.
I think I'm going Liz.
Yeah,
I kind of.
What about Lizbeth, Girl from the Dragon Tattoo?
Listen, I know she probably almost killed people with fake blood tests and stuff, but I kind of feel like it's America. It's the land of second chances, and she has a baby, maybe 2 babies.
Are you out of your mind?
Yeah. I just feel bad.
Okay,
I know she's going to. I'm not saying don't jail her. Jail her.
Put her in jail, but call her Liz.
She's a criminal.
But call her Liz.
But if she wants to be referred to as Liz, I will abide by it.
I'm up for that if she wants to be Liz.
I'm just saying, what you did is f***ed up. You obviously are
convicted
a criminal.
Felon Liz
but
Holmes.
She's going away. All right. Google I.O. Day. Do you follow large cap tech stocks individually, or does any of this stuff really matter that much to you?
I'm not a big individual stocks guy now.
Okay. Just point out, Google really shifted the narrative this week about AI. They had their conference. The stock had been under pressure. The CEO had been under pressure. And they came out with 50 different AI announcements in one day. And I thought it was pretty impressive. What did you think from all the stuff they released? You going to use any of it?
I didn't see it. It was just today.
It was today.
It
was yesterday and today.
Can I say my one takeaway from it was they dropped the waiting list and now they're letting everybody in. And I'm like, I don't want to be at the club that lets everybody in.
Unless it's a tool and not a club. And then
unless it's a tool, yeah.
No, it is you meant the Palm 2 large language model. So they're going to let people use it like ChatGPT.
Yeah, well, there was a waiting list though. Like there was
Yeah.
you got to be cool enough to get let in, and now they're like, no, everybody come in, and I'm like, is that the club I want to be at?
I think the email thing was cool, where they say to you, "Do you want help writing this email?" And the example he used was like an airline where you're writing an email to get money refunded for something.
Yeah.
And he's saying there are like buttons where you could say simple, elaborate, and within this, you don't have to go to a separate site. Within Gmail, you can have the AI construct the email, and it knows what you're trying to accomplish because it's reading the previous emails in the thread. So it knows that you're in the midst of, fighting to get a refund or something. I mean, if that stuff really works as advertised, and I have no reason to think that it won't, it's really going to be a very big difference just in the way that we all go about our lives. I don't know. I don't know what it means beyond that, but I feel like they announced like some substantial stuff. So I don't know. Any thoughts?
On Google and AI?
Yeah. Not really? Okay. All right. We'll leave it at that. Did you have fun on the show today?
I had a fantastic.
We had the best time. I'm so glad you came. I know you do a lot of video throughout the course of the week, so thank you for doing our video. We do this thing called favorites. We end the show with maybe anything that you're reading, listening to, watching that you would recommend to the audience. You want to go first?
Sure, I'll go first.
All right, do it.
So the thing that I am most excited about right now, there's this new podcast. It's a video podcast like this one. It's called It Is What I think It Is What It Is.
What is that?
It's a sports podcast, kind of in the vein of like Skip Bayless and Shannon Sharp or Stephen A. or whatever. It's Mace and Cameron
Oh, no way.
talking sports. So for our younger listeners, Mace and Cameron are rappers.
Once
that were
upon
very
a time,
popular.
they were as big, if not bigger, than whatever rapper you think is a big deal now.
Yeah. So and it's them kind of just talking sports, but it's just ridiculous. It's like two street dudes who are millionaires, but who aren't really that popular now, having this really just unfiltered, because it's clear they don't really care.
But is it sports?
It's sports. It's all sports. So
Was
it's just
Mace-
them talking about sports.
Did Mace become a preacher or was that a rumor?
Yeah, Mace became a preacher, then came back and started rapping about, the same.
Ran out of money, came back.
Ran out of money, came back.
Well, they
and
had
then
a song
Puff Daddy stole his money
Were they
again.
Horse and Carriage? Was that Cameron and Mace?
Cameron and Mace, they may have, but Cameron and Mace were originally in a group together called Children of the Corn with Big L. I don't know how deep you're like.
It's pretty deep.
Okay, yeah, with Big L,
This
Mace.
is before Dipset or after?
This is pre-Dipset. So this is,
Pre-Dipset, okay.
before when they all were starting, but Big L was still alive.
Yeah.
So it's Big L,
'Cause
Mace.
it's still Harlem.
Cameron, like they all came out of
Yeah,
Harlem
yeah.
and they started this group called Children of the Corn together. And that's why he was Murder Mace, because all they rapped about was killing people and like,
Yeah, same with me.
all that. Yeah, of course. I've heard your mixtape.
My rap career in the 90s was sort of a similar
You
trajectory.
definitely tried to do some shit when you were like 15.
There is no evidence of this.
Yeah.
I would just say.
Yeah,
There's innuendo. But are they funny? I know
It's hilarious.
Cameron is funny.
It's the funniest thing.
You follow him on
out right
Instagram?
now? I don't know.
Okay.
I was not really, because I was never a big Cameron or Mace fan.
Okay.
But it's so funny.
I met Jim Jones the other night. I was at a Benzinga event down by the Chelsea Piers, and it was like a sort of crypto-y. It was the FinTech Awards, and I guess they had Jim Jones there as an investor in some of the FinTech companies.
Okay, yeah.
And they got him to perform, but the crowd was like not ready
Did you
for
do
it.
Fly High?
Yeah, of course.
Of course.
I mean, I think maybe a little Hey Ma, but Joel Santana wasn't there.
Right.
They- He's amazing. I love Jim Jones, but some of these guys I feel like are more famous now post rap, just on social media. I think Cameron might kind of fit into. I mean, he's got a couple of hit songs.
Yeah,
but
Cameron's
he's
big.
millions of followers on Instagram.
Yeah, he's funny.
Because he's funny.
I don't have Instagram, so.
So
I
this
don't
is
follow him on Instagram.
It Is What It Is podcast.
Yeah.
Hey, we
All
forgot
right.
to plug Future Proof.
Are we doing that this week?
I mean, no.
No. All right. Michael, you have a favorite?
My favorite thing of the week was Succession.
Okay.
No spoilers. I haven't watched it yet.
You do that every week?
I don't think I do. I mean,
Every other?
No, because there was a lot of sports this week. It was a lot of sports this week.
I'm not. Are you watching like a lot of TV shows, or are you just sports and markets?
Yeah, mostly sports and markets. Like I check in with the sort of the water cooler shows just so I know what's up. But
I mean, I watch basketball every night.
Yeah. This time of year.
And
it's most
every year, my
basketball.
wife is like, I can't believe you're still watching basketball because the playoffs it's like April through June.
through June, yeah, it's serious.
There are people that are doing that and hockey right now at the
Not
same
me.
hockey playoffs at the same time.
Avs are out, so I was just like, no, I'm good.
I have a podcast rec also. Joe and Tracy on Odd Lots had a really smart semiconductor analyst. I think he's Alliance Bernstein, Stacy Razgon, and he basically broke down for them in English how AI actually works through the lens of somebody who covers semiconductors. And when you watch financial media these days, it's like alternating between inflation and AI. And those are like the two big things.
Yeah.
Almost nobody who's an investor who has not like put in any time really understands what it even means that NVIDIA has AI chips and how they work. This guy did such a great job, like literally explaining why NVIDIA, why not AMD, why not Intel, and how the technology actually works that everybody is launching and announcing. So I highly recommend checking out that episode of Odd Lots with Joe and Tracy. All right, I think we're going to call it a day. We'll take a brief intermission, and then we'll have Dion come back in. We'll do another 2 hours.
Yeah,
What
can
do you
I
think?
just say how offended I am that you mentioned Bloomberg again?
Well,
Another,
that's
like,
a good point.
the disrespect of
All
the
right.
Wall Street Journal?
You're right.
And after Denver, he went after Denver.
You're right. You went after the Greek community.
I
You're
did
in so
not.
much more
The
trouble.
banks.
You're in so
The
much more trouble than I am
banks.
today. I'm gonna plug your video series. What I want to do is make sure everyone knows how to find it. So it's a YouTube channel.
Yeah.
How do they find that channel that features Dion?
Yeah, you can just look up Market Takes. That's
Okay.
the easiest way. Or my name, Dion Rabouin. There's a lot of vowels in it,
Yeah.
so it's hard to spell. But if they're watching the
We're
video,
gonna link
hopefully-
out to it too.
Yeah, so
Okay.
that's just search for me or Market Takes on YouTube.
All right.
You should be able to
Dion,
find
you killed it on the show today. We're so happy that
Thank
you
you.
came.
Thank
Hope
you,
you'll come back. You come back?
Absolutely.
What are you doing next week?
I'll be here. Can I come in? You guys have
All
it?
right. Shout out to Duncan, John, Nicole, Sean, and the doc. Everybody did such a great job this week. Guys, thanks so much for listening. Make sure you do the reviews and the ratings and all those things. The algorithm demands it. We will be back with you very soon. Have a great week.